Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, September 21st, 2020, and I am pre-recording this Trading Places Live for Tuesday, September 22nd. Futures are currently flat, maybe up a little bit. Nice recovery today on the NASDAQ. Saw a pretty good recovery really across the market, but the NASDAQ 100 actually turned positive after being down quite a bit intraday. And we'll talk about that in just a bit. Going through the agenda for today's show, we got the daily market recap. Then we're going to get into a couple of news items in the news, talking technically. Take a look a little bit at technology, and one ratio that kind of changed today I think was pretty important. Reversing candles, a lot of those today. Got a few individual stocks I'll go over there. Earnings spotlight. Hadn't really been any earnings out the last couple of days, but things are going to pick up later this week. We'll look at some of those charts. And then we'll wrap up the show with 3 you must see. These are actually 3 stocks. I like all 3 of them. And they had pulled back recently. I think there are opportunities in each of them, and we'll go over those to wrap up the show. Before I get into any of that, I do want to just point everyone to earningsbeats.com, where you can sign up for our free Earnings Beats Digest newsletter. Just name and email address. That's all you need. Just hit that subscribe button, and you'll be good to go. We do publish articles Mondays, Wednesdays, and Friday mornings just before the market opens. And usually it just focuses on some of the topics that are near and dear to our heart at Earnings Beats. Talk a little bit about earnings, talk about relative strength, talk about sentiment issues. We had a bunch of those at the beginning of September, but they've worked their way out. So I think the market, certainly from a sentiment perspective, looking a lot better. But anyway, if you sign up for the newsletter, you'll get 3 articles a week, and I think will help in your trading or in your investing. Also, if you'd like, come over and join us at Earnings Beats. We have a 30-day, essentially no-cost trial at $7 to sign up, but we'll refund you the $7 within a week or so. So you'll get 30 days to enjoy our service. I tell you what, our model portfolio, we have been now 1 month into this current quarter, and you can see the model portfolio already this quarter up 4.5%. S&P is down 2.78%. So we are now up more than 7% this quarter. Look at the results of our model portfolio since inception. In less than 2 years, we're up 137.48%. S&P 500 is up 21.94%. So 116 percentage points above the S&P 500. And it's not any huge risks. I mean, we have 10 different stocks in 10 different industry groups, leading stocks in leading industry groups, and they're equal weighted. So that's all we do each quarter. And we do that for 4 different portfolios. You can see 3 of our 4 have outperformed the S&P 500 since inception by wide margins. The only one that's lagging really is our income portfolio. And we had 1 bad quarter back when this pandemic hit. Some of the defensive plays that we had in there that were dividend yielders got hit really hard. But other than that 1 quarter, we've got 4 really strong portfolios. So you can check that out. And actually, if you're a StockCharts member, you can download our portfolios right into your account. We have chart lists for each of our portfolios. We have multiple chart lists, probably have about 10 or 11, maybe 12 at Earnings Beats. So you can download into your account at StockCharts. So pretty cool feature that we offer our members. But anyway, we'd love to have you. So all you have to do is hit that Join Today button and check us out for 30 days, no cost. Worst case, you'll have a bunch of chart lists that you can use for the next quarter. All right, let's move on to the daily market recap because it was quite a day. The futures were way down. Market finished or opened way down. The Dow Jones, if we pull up this chart, I'll come back to the candle glance here in just a second. But if you look at the Dow Jones, we were down to a low of 26,715. So we were down 400 points, 432 points below where we finished. So that's what, 940 points at the low today, almost 1,000 points today. But we finished down 500, which still wasn't a very good day, but it's better than 1,000 or 940. So we did get a nice recovery. And the other thing that I think is really important when you look at these indices, I know a lot of folks are writing, I'm hearing a lot about, oh, well, now we're below the 50-day moving average. Keep in mind, from a longer term perspective, I would be paying closer attention to the 20-week EMA. And when you look at the Dow, we just tested it for the first time. And the reason I say the 20-week, I mean, when you look at these long-term uptrends, and I believe we're in one right now, normally that rising 20-week EMA provides pretty good support. Now, when we go through consolidation, sideways action, then moving averages really don't do a whole lot for us. But when we're trending, and I believe we were trending going in the beginning of 2020, I think we were ready to take off at the beginning of the year. And then the pandemic hit, had the big correction. But now the market is recovering. And I think the market's going to continue to strengthen into the fourth quarter. But anyway, let's go back to that candle glance. So you can see the Dow, which was down 940, came back down 500. So it was a nice recovery. The S&P 500 went down to 3229, finished at 3281. The interesting part here, 3229 was exactly, almost to the penny, a 10% correction off the high back at the beginning of September. So back at the beginning of the month, when I was talking about sentiment issues and the fact, that it looked like we were going to have some, we needed to be very cautious in September. We certainly could be expecting a pullback or some selling. Well, we've gotten it 10% in 3 weeks. That's a pretty significant drop on the S&P, but we did rally in the afternoon. I think we may have put a bottom in. I'm not quite sure. I think the rest of this week we still have to be a little careful, a little bit on our toes, but this could have marked a bottom today. On the NASDAQ, I think it did mark a bottom. Big rally back on the NASDAQ, not showing the NASDAQ 100 here, which actually finished in positive territory, but the NASDAQ itself only finished down 14 points. Excuse me. And if we take a look at where we were on this chart, we got down to a low of 10,519, finished at 10,778. That is 259 points off the low. Very nice recovery. Nice hollow candle, many times off a downtrend. That can mark a bottom. I think it probably did mark a bottom. I'll be surprised if we go down below that 10,500 level. I think we go back up on the NASDAQ. Okay, so let's move back to our candle glance. So the mid caps down 2.4%, small caps 3.45. I'll tell you one thing. This reminded me a lot of March, when the Dow, S&P, mid caps, small caps underperformed the NASDAQ, and we saw money rotating back into some of those pandemic stocks, the stay-at-home stocks. Those stocks did really well today, and we'll be looking at some of those later in the show. From a sector perspective, the only sector that finished positive, technology, up almost 1%. That doesn't seem very defensive to me. Materials down 3.3%, industrials 3.32%, energy 3.32%, and real estate 2.68%. So these were areas of the market that did not do well back in March, and we saw some pretty big hits. Look at energy down here, threatening a breakdown. We broke down below this double bottom, went back up, tested it along with the 20-day, and we're rolling over. Real estate, after getting up, testing overhead resistance from back in June, looks like we're rolling back over again. So definitely there's some areas of the market you want to be careful, but I don't believe technology, consumer discretionary at this point, I don't think those are areas I would worry that much about. I believe the market goes higher, and I think those are going to be leaders. Okay, let's move on. 10-year Treasury yield. First of all, tomorrow, Tuesday, we will have existing home sales come out. I did like the fact that the 10-year Treasury yield, which was down earlier to under 0.65%, rallied back to 0.67. So we did see money rotating out of Treasuries, which was sending the yield higher later in the day. And that money coming out of Treasuries went into a lot of technology stocks. And I believe we're going to get another pre-earnings advance. And technology, consumer discretionary, communication services, those are the areas I'm going to be looking for to help lead us back to the upside. How about in the news after the bell today? We had, we had a couple of companies come out after the bell. And one thing I'm looking for as we, go through the balance of September is whether or not we get any warnings. Really haven't seen much in the way of earnings warnings. But anyway, after the bell, Fortune Brands came out. They said they're going to authorize a $500 million share repurchase program. And the stock was still flat after hours. But the one thing I will say about this stock, look at the AD line. It's been strong. Look at the relative strength. I mean, we got a really strong stock here. It's been a very strong relative performer. So not just absolute strength, but also relative strength. And never a bad thing to hear management or the board of directors authorizing a share repurchase program. I think that shows confidence in the company. All right, next up, KFRC. Now, they expect their Q3 revenue and earnings to be above the top end of guidance, previous guidance. So let's see here, KFRC, and I'm going to give you after the bell. Well, after the bell, it's up about 1%. So not really a huge move. When we look at the chart, you can see the stock got up to $42, pulled all the way back to 32, essentially filling the gap. And now they come out with pretty good news. I wouldn't be surprised to see this start to turn back up, maybe off of this uptrend, maybe start to put in a cup. So do we go a little bit lower? We got gap support around 31.60. Today's low was 31.99. Perhaps we go a little bit lower, but with the news coming out after the bell, I don't know, this could start something back to the upside. I would certainly be more bullish this stock if we, in fact, do start to climb back up, say, above that 20-day moving average. All right, next up, REMAX. RMAX. They guided Q3 revenues slightly below consensus. Now, take a look at this stock. First of all, real estate services versus the S&P 500, struggling to break out. It's been mostly flat the last 5 months, so I wouldn't say it's a leader, that's for sure. And REMAX relative to the S&P, not far from about a 5-month low. And versus its peers, we're actually at about a 3 or 4 month relative low. So the fact that it's coming out lowering guidance should not be a surprise. All right, one last thing I wanted to just talk about, and that is the rising concerns regarding the virus and maybe even potential lockdowns as we go forward. I don't know if that's going to happen, but the market at least was concerned enough to see money rotate into some familiar names. So let's just go through these real quick. Zoom video communications breaking out to a new high. Look at the volume. Last couple of days, very strong. AD line strong. This is one not yet ready to quit, looks to me like. Peloton rising after reporting its earnings, gapped up, went all the way down to its 20-day, came right back up, now threatening a breakout. Volume picking up again here. And actually, recreational products was an area that I mentioned to members in my Trading Places live show earlier Monday morning, where I think this is a group that's ready to turn back to the upside. And if it does, you've got a leader here with Peloton. So watch for that breakout. I don't know that I'd be jumping in right here, right near resistance. I need to see that breakout first. But if it breaks out, I think it could certainly run. Also moving higher, CHGG. This is Chegg. Been in a downtrend. Nice reversing candle, though. Watch to see if we can get through the 20-day. I like the fact that we went down and held this low after breaking out back in June. We pulled back to about 62.50. That's just about where we were on Friday before we had the really nice recovery on Monday. But that's a nice candle there. Look at the accumulation distribution going up while the stock has been going down. That's a pretty good sign as well. Also, Slack Technologies, ticker symbol work. This is one that's gotten beaten up the last 2 quarters with its earnings, but both times it beat top line, beat bottom line. Look at the accumulation distribution. Stock was up at 40. It's now today finished at 26 and change. Recently was down to almost $24, and yet AD line's not going down. So yeah, there's been some selling, but most of it has been at the open on these gaps. I actually think there's some accumulation taking place here. And then Wayfair, another company that benefits from stay at home and maybe some lockdowns if we get back into them. But I think Wayfair's picked up a lot of market share, and you can see the stock breaking back up against this reaction high back just a couple weeks ago near 300. We actually cleared 300 on the close today. Volume's been starting to strengthen again as we move higher. And look, once again, accumulation distribution breaking to a new high, even though the stock price is not. So I think that these are all companies still being accumulated on Wall Street. All right, let's move on to talking technically. I wanted to bring up the technology group. Technology overall, nice recovery. I kind of like this candle off of the move up. First of all, we broke at about 110. So you can see this move up after we went through the February high, got to 110, pulled back, got all the way back to 110, gapped up, and since then just came down and filled this gap and then put in a reversing candle on some increasing volume. Once again, we've been moving lower in the XLK, but we're not far from breaking out to a new high on the accumulation distribution. I think the XLK looks pretty good. And when we look at it relative to the S&P 500, this is a 2-year relative strength chart. And look at XLK relative to the S&P. And see how every time we pull back, get close to that rising 20-week EMA, we turn back up again? Well, we're following that same pattern again. So technology, as we get ready to head into the fourth quarter, look pretty good right now to me. The last thing I wanted to do here in talking technically was just show you this IWF-IWD, which is growth versus value. And I wanted to annotate this. This is a chart that I've sent out to members at Earnings Beats. But, we have these pullbacks, which is fine. Growth is not going to be the leader all the time. But what I can say is that if we just kind of connect right here at these lows, from back in February and then again in June. Now remember, June 8th was when the S&P 500, the Dow, airlines, all the areas that had underperformed caught fire and went up, posted highs on June 8th. Well, that took the wind out of the sails of growth stocks. Growth stocks took a back seat to value. So I think that low was pretty important. Obviously, the low in February was pretty important. And look at what we just hit. Right on this trend line. Now, I was looking at the possibility of the trend line and then also relative support. So there was a top, here was the big pullback, there was the breakout. When we came back down, we tested that area, that relative breakout level, we held, went to a new high. So that to me was like worst case scenario, 1.675, 1.68. But we hit this trend line and bounced. But these were the two levels that I've been watching. And so this was a good sign that we bounced off of it. Like I said, the worst could be in. I think maybe, I don't know, if something were to happen, maybe later this week, maybe we take one more drop. But I'm beginning to think that today's low, especially the way the NASDAQ 100 reacted after being down so many points this morning and all that money rotating back into the Apples and the Teslas and the Zooms and the, those types of stocks. I don't know. I think maybe we found a bottom. All right, let's move on to reversing candles. Now, I wanted to show you, first of all, if you go to your dashboard and you just scroll down to your scans. Now, if you don't see this, your scans, then it probably means over here under the gear shift, you haven't checked off scans and alerts. So if you don't have that checked and you look down, you're not going to find it. So if you don't have it, come back over here, click on scans and alerts, and then go down. You should see it right here. Now, under this more, you can see predefined scans. And for reversing candles, what I did is here's your candlestick patterns down here. I just went through and looked at some of these. I looked at the, in particular, the hammer. There were a bunch of hammers. And then I also saw some bullish engulfing candles. So I used bullish engulfing and looked at some of these, focusing mostly on the NASDAQ stocks. And so when I went into here, and you can see like on hammers, 77, you get all kinds of things. You got ETFs, you got stocks. I like to sort it by scooter and then look for the individual stocks and start going down, looking for potential candidates. Same thing with the other pattern, which was the bullish engulfing. So I usually do that, and then I'll sort it by scooter, and then I start working my way down. So some of the stocks that kind of stuck out to me, and I think they all came from these predefined scans. But I'm going to pull up the first one, which was Copart, CPRT. And you can see recently, see how we've been, holding this 100 level. Today we got down and put in a low at 100.07, but rallied back to 102.63, holding on to that 20-day moving average. Look at the AD line, actually breaking out to a new high today. I think Copart, after gapping up to 110, pulling back, holding this 110, I think we're probably heading back to that 110 and eventually breaking back above it. Next up, Cintas. This company reports later this week, but I really like this hammer. Stock was up to 340, little over 340, pulled all the way back down to the Monday's low, 307.65, closed at 316 and change. The AD line still remains pretty strong here. And let me pull this up on a relative basis. But the stock continues, you can see, to be one of the leaders in the business support services. And business support services not far from a break from a new 52-week high versus the S&P. So I actually think this is a stock that we might see off of that hammer at the 50-day start to recover into its earnings. I wouldn't be surprised to see a good report coming out here. Other stocks, how about DocuSign? DocuSign, I could have included up there with those lockdown stocks. This is a stock that did very, very well off of the March low. Look at this rally. So this was a stock that, stay at home, social distancing, all of that led to some market share gains for DocuSign. And after a huge earnings report, stock pulled back. I had just annotated this for members recently. This 180, 190 area was really good support, and it looks like we're bouncing off of it. Big question now is, can we get through these moving averages? If we do, I think we'll begin to gravitate, maybe make our way back toward that 280, 290 level. PayPal, another recovery after gapping down today. Nice bullish engulfing candle. Like DocuSign's got to get through its moving averages, but also look at that accumulation distribution. You see these stocks going down. We saw this back in February and March. Look at these moves down. But on the move down, what did the AD line do? It actually kept, pace and maybe even moved to new highs. Look at what's going on here with this pullback. Same thing. Look at this pullback. Same thing. This pullback. Well, we came back a little bit, but quickly went back to a new high. My point is, when this AD line is staying up, it's hard for me to believe that institutions are distributing the stock because they don't put in market orders at the open. It takes selling during the day, and I'm just not seeing it here in the AD lines. Another stock, how about AMD, Advanced Micro? Look at that reversing candle right at this gap support area, top of gap support. I wouldn't be surprised to see continuing strength here. Watch that 73.5, 74 level. I think that probably holds for AMD. SEDG, this is into the renewable energy space. Solar Edge broke out above this prior high around 180. Got gap support maybe down around 174. Today's low 179.17, but a nice reversal finishing back at 190. eBay. Now this one technically I had a little problem with because unlike the others, the AD line's been coming down. Relative strength's been, it's been not a very good performer relative to its peers. But I was looking for this area around 46, 47 to hold. We didn't quite get down there and printed this reversing candle. I don't know. We got to get back through that 20-day. But eBay at least put in one positive today in that nice reversal. CDNS, last one, Cadence Design Systems, nice reversal here. Also, double bottom, that earlier low back on September 8th, down about 98 bucks. Today, 97.45 before we reversed, finishing back up at 102. I think eventually we're going to see a cup. I believe the market goes up. So when I see pullbacks, I start thinking continuation patterns. What kind of continuation pattern? Maybe this will be a bullish wedge, but I'm thinking a cup. I think it's going to be a cup, and probably at some point later in, maybe in October, I wouldn't be surprised to see this stock moving back up toward that 117 level. All right, let's go on to earnings spotlight. Just got a couple of these earnings I wanted to show you. The first one is Nike. Nike will be reporting on Tuesday after the close, or I think it's after the close. I'm pretty sure it's after the close. But anyway, Nike 5 days in a row been moving down. AD lines coming down, but it was just at an all-time high, or at least a one-year high. And when we look at the relative strength, Nike's been a leader. So I believe Nike's going to have a good report. Now, could we go down after the report? Possible. I mean, stock's been bid up quite a bit. Maybe it's a buy on rumor, sell on news type of event. But if Nike were to get back down to 105, 106, something like that, I think that would be a great entry into the stock. Another one, AZO, AutoZone, reporting on Tuesday. And AutoZone, AD line, it's been kind of flat while the stock's been going up. So there are some concerns there. Specialty retailers have pulled back here in September. AutoZone, relative to its peers and relative to the S&P 500, hasn't been very good, even though specialty retailers have. So this one probably bothers me a little bit better. Now, we do have good support around 1170, 1175. I wouldn't want to lose that level, given everything else going on here on this chart. I like the group, but this wouldn't be one of my favorite stocks. How about KB Homes? Home construction has been pretty strong. KB, can we get through that February high at $40? I think it's coming. I like today's bounce off of that 20-day moving average. That bounce was nice. And look at the AD line breaking to a new high. So a lot going on here. We got the relative strength starting to turn back up again for the stock. It's got earnings coming up tomorrow as well. We'll see whether or not, when I say tomorrow, Tuesday, remember I'm doing this on Monday evening. So earnings on Tuesday, that could be the catalyst for KB Homes. We'll see. And then one more I'll go over is Stitch Fix. Stitch Fix, this one I think could be in for a short squeeze. Now, they've got earnings out on Tuesday as well, and I believe it's after the bell. But if the earnings are good and we get this gap up, we could definitely see a big short squeeze. Stitch Fix, 43% of its float is short. I believe that ranks it somewhere around 10th or 11th in the market as far as percentage of float short. This is one of the most heavily shorted stocks. If you get a breakout, especially a big earnings report or something, that would be good. The stock has been showing some nice relative strength versus its peers and versus the S&P 500. So watch that earnings report. All right, let's move on to the three you must see. We'll wrap up the show. First up is Costco. Nice rally up to 363. This stock's pulled back. Look at that nice piercing candle. Near support on the 50-day moving average. I wouldn't be surprised to see a nice little recovery here on Costco. From a relative strength standpoint, Costco versus its peers trying to make a breakout, even though it's been selling off. So it's been going down, but it's actually, its peer group's been going down. You can see here, personal products. So I actually think that we get this relative breakout here. I wouldn't be surprised to see Costco make another run back for those low 360s to test the early September high. Next up, Adobe. Adobe, same thing. Went up with earnings, pulled back. I think right here at the 50-day, also a piercing candle. AD line looks good. I think Adobe rallies from here. And then the last one I wanted to bring up is Ring Central. This is one of those stocks did very well during the pandemic. Stock went down, AD line kept going up. Stock going down, AD line going up. Don't be surprised to see a big rally on RNG. All right, that's it for me. I want to thank everybody for tuning in. I'll be back on Wednesday morning at Earnings Beats for your next Trading Places Live. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.